Welcome to Social Currency, powered by Sunrise Banks, a podcast about the most innovative changemakers in finance, technology, and social impact, and how they, our guests, are dismantling barriers, reshaping their industries, and perhaps even ours too. I'm your host, Tyler Seidel.
And I'm Eric Schur. Here, we speak to those driving positive change through social entrepreneurship. From cutting-edge technology to creative grassroots efforts, each episode seeks to reveal the stories behind the revolution that is propelling us toward a world of financial inclusivity.
I'm Tyler Seidel.
And I'm Eric Schur. And today, we're going to be talking about the current regulatory environment and what the future of the industry holds.
And today's guest sits at the crossroads of finance, innovation, and policy. He is the president and CEO of the Innovative Payments Association, or what we maybe colloquially refer to as the IPA. Before that, he was the vice president of banking and securities at the Financial Services Roundtable. He holds a law degree from Howard University. He is not just watching the payments revolution, he's helping to shape the industry and policy that surrounds it. Our guest today is Mr. Brian Tate.
Brian, to start us off today, can you walk me through the professional journey? Like, what drew you to the regulatory and legislative landscape of DC, and how did that path lead you to your current role as the CEO of the Innovative Payments Association?
Well, first, I want to thank Tyler and Eric, both of you, for inviting me to participate in the podcast. I think this is great to have this conversation about what's going on in DC. So I very much appreciate the opportunity to join you today. That being said, it looks like you took a peek at my LinkedIn profile at the very least. So I would say, to start off, and I'm going to borrow a line I from the former CEO of US Bank. Nobody grows up wanting to be a banker. They want to do something more exciting, be an athlete or a fireman or a policeman or something else that has more adventure to it. And I will probably say I'm no different from anyone else in that respect. But honestly, I got my start, not by accident, by happenstance, probably. After law school, I was looking for a job, and I ended up getting hired by the Maryland and DC Credit Union Association. And so I got my start in banking with the credit unions, and knew nothing about credit unions or much beyond banking generally, beyond my checking account. And so they had asked me to come in. They were looking for a government relations person. I had never done government relations. But the fun part was, to be honest, since I was new, I was their first government relations person. We kind of just made it up as we went along. And, there's fits and starts, but you do learn, in my opinion, the best by just doing it. And I did a lot of kind of state work in Annapolis. Because of our jurisdiction, I had engagement with the DC City Council, drove all over the state of Maryland, even though I was from Maryland, and saw parts of the states I'd never been to before. So in that sense, it was a good learning experience. Plus, I got to learn a little bit about banking. And while credit unions don't necessarily have, for the most part, the diversity of issues and products that banks do, I thought it was a good training ground to learn about checking accounts, auto loans, mortgages, kind of the basics, and had the opportunity eventually to move to CUNA, which is the Credit Union National Association, which is kind of, I like to refer to as the mothership of credit unions. And so the state leagues were members of CUNA. I was part of their state government relations department at CUNA for a year. And then a weird, kind of happenstance again, ended up back at the Maryland and DC Credit Union Association and stayed there for a year, and then got a opportunity to work at the Financial Services Roundtable. And I'll be honest, I kind of applied as a joke. I never thought that they would be interested in me. And this was right after the housing crisis started. So I'd like to tell people I came in to help fix things, but it had very basic training on kind of banking products. But then all of a sudden, I got hired, and literally 2 weeks later, I'm in a room with, all the big bank CEOs in a meeting with Tim Geithner. And I wasn't like leading the meeting or participating. I was kind of standing around as a staffer on the side. But it does tell you how quickly things can change, and you can be put in rooms you never thought were possible. So, um, I the great thing was at the time, unfortunately, there was a crisis, but the great thing was for me, because there was a crisis, they were kind of like starting over in a lot of sense in a lot of parts of the regulatory world for banking. So I got to learn a lot of different areas I never thought I would touch, from too big to fail to the Durbin Amendment to retirement issues, small business issues. I like to refer that part of my career as kind of like banking finishing school. Housing. I mean, there wasn't anything that we didn't work on as a group. And why I may not have participated in everything, it opened a lot of doors, and I got to be able to walk through and have some new relationships with people on the Hill, the regulatory side, the industry. But it was fantastic. And in terms of a learning experience that I'll probably never get a chance to repeat again. But then at one point, how I made my way over to what was then MBPCA was there was a proposal, an ANPR out of the CFPB on prepaid cards. And I had no idea what a prepaid card was. And I literally Googled prepaid card association because I figured there was an association for everything. And Terry Maher popped up. And so I just picked up the phone, called Terry, and Terry was wonderful, kind of explaining the industry and the products to me and what was going on so I could write this comment letter. And he literally gave me his draft. He was so nice that I was able to kind of learn through reading his work, draft my own letter. And then a few months later, a job opened up there. And I just called Terry and I said, "Hey, I'm interested in, um, you know, learning more about the industry." Everything I had read talked about all the numbers were just going up and up and up in terms of usage. And at the time, there was a lot of talk about financial literacy, low cost products for people. And I figured this was like a giant secret that nobody knew about. It was this kind of niche area, and I applied. I got the job, and been off to the races ever since. And it's been super interesting because I still consider this the most exciting part of banking. With all the changes, all the new companies, all the new products. And if I've been here, it's hard to imagine, but I've been here 12 years. And 12 years ago, if you had told me we would be where we are today, I wouldn't have believed you. All the key players at the time could probably have fit in a room. And everyone knew each other. And it was a different world. So it's been great to see kind of the explosion and the nexus between payments and all different segments of banking. So hopefully that's not too long an answer, but that's how I got here.
I think it rounds it out very well. And I appreciate that background. The one thing that really felt like was picking up momentum in terms of your career path and was really an inflection point, I think, in so many respects, was when you got picked up into the financial services. Let me see here.
Roundtable, yeah.
The roundtable and the audience that you were introduced to, the likes of Geithner or otherwise. How did that feel? Kind of having that big moment where the velocity of your career path all of a sudden picked up, and I bet you looked up and even looked at new horizons. Like in your mind, you think maybe I'm going to land here in life, but after something like that, how does that change you? Because it would have to.
I will tell you, it was weird at first. Because literally, like everyone I'd seen on TV and read about, like I was having conversations with, and it was weird at first, and then it becomes normal in a weird way. And I always had, and to be honest, if I'm being candid, I always had in the back of my mind I wasn't going to be there forever, because it does burn you out. I will tell you that. You are working around the clock, up and every year I worked there, except for maybe the last year, the first 3 years, I might have been working on Christmas Eve. My wife would have, might have had a heart attack. You were working, 6 a.m. to 10, 11 at night every day. Because there was always something at the time that needed to be fixed or discussed or talked about. You do being in, basically at the round table, we're the largest institutions in the country. You got to be on first names with the CEOs. Richard Davis, who I borrowed that quote from in the beginning, was the head of US Bank. You ended up just talking to these people, and they were regular people. And it does kind of become weird that, you're having private conversations with a senator, or you're advising a House member on, like, hey, this is how this really works. So in that sense, I would always say it was pretty cool. I wouldn't say it wasn't. But it is a grind, put it that way. And things did start to slow down about 2012 and become normalized. I was able to work on and pass bills through Congress. One of the things I take pride in was something called the Small Business Jobs Act. And I led an effort to get that across the finish line and get that signed into law. It was the only other bill that was signed into law by Obama after Dodd-Frank that related to banking. And that was a loan program to small businesses in the States. It was a creative program, and so I do take credit for that, or partial credit. There were lots of people who worked on it. But it was a different time, and I will say it did kind of not jumpstart, but kind of put some dynamite under my butt in my career.
Well, when you know names and you're having those private conversations, and you may know better than the layperson, certainly than I would, it feels like DC is a little bit of who you know, not what you know. And that becomes readily apparent when you're trying to effectuate change, whether it's policy or otherwise.
That's partially true. I would say it is a lot of relationships that things build on in DC. I will say though that if you don't, anyone, I always used to say something along the lines of, it's one thing to have a meeting. Anyone can get a meeting for the most part if you're persistent enough. The question is, what do you do in the 5 minutes that you have that meeting? And if you
Mm.
don't know the substance side, um, quite frankly, you are putting, if it's a colleague or someone in a difficult position, to go, hey, I want you to do this, or I would like you to consider that. But if you don't have a solution in your pocket, there's a good chance they're not going to be listening or not going to be able to take the next step. I like to try to find connections with people and say, your interests cross with ours. Here's how we can solve this together. But in some cases, it is relationships in terms of purely getting the meeting. The great thing in DC, and it's changed a little bit in my time. I started before I went to law school. I worked on the House and Senate side in the late 90s for a senator and a congressman. It wasn't as contentious as it is today. There was a lot more cordialness between offices, even with the other side. I specifically remember being told we were not to be rude to anyone, including Republicans or Democrats, someone that had a different view. And, that's kind of been lost in many ways. And it's unfortunate, but I do think relationships, you end up behind the scenes having relationships with everybody. And the great thing about DC is that somebody you knew who was an intern and this has happened and will continue to happen, is all of a sudden chief of staff. One of my former interns, I went into a meeting a couple of years ago and he was chief of staff to Senator Moran. And it's like, didn't you just work for me 5 minutes ago? Um, and now I'm trying to have a conversation with him, and he was a great guy. But that happens all the time. People turn over or get let go or quit, whatever it is. And it's the next man up. They'll just literally say, like I said earlier, the best way to learn is just to do it and hit the road running. And that happens a lot in DC. So it's great to see people you started off with who are in positions of note that none of us could have thought of 10, 15 years ago.
I think to me that just highlights some of the axiomatic, golden rule: treat everybody with respect,
Correct.
and perhaps
Absolutely.
never burn a bridge. Um, from where you sit and kind of just inviting additional candor, because it just feels like it's open kimono right now. What feels like the hardest truth about the payments industry that people are still reluctant to say out loud?
Oh, wow. From my perspective, I think, what I would say is this: we're all capitalists here. We all want to make money. We all want to do well and do good by our customers. I do think, from my experience in this industry, there's a way to do that. And part of that is hiring and retaining good people. And I know that costs money and it's hard to find. You're competing for talent, but hiring good, solid people that know what they are doing. I think the biggest kind of thing that's not said out loud is compliance, compliance, compliance. And, we've all seen companies that have grown very rapidly, but then, don't have a plan to add additional people or, make sure that they are staying compliant as they grow. I've seen too many good companies with good ideas not plan, whether it's, hey, if we grow to this size, we're gonna bring on 4 or 5 key people that know what they're doing on BSA, or we're gonna bring 4 or 5 people that know the product line in and out. I think the quiet part out loud is, we need to collectively continue to focus on why people want to use our products and focus on the end consumer. And the way to do that is to make sure you have a good team in place to serve those people. We've had many administrations from Obama to Trump to Biden back to Trump. The one thing that's constant is enforcement and oversight. And it felt like a period a little bit before COVID, during COVID, where it felt like people were kind of growing so fast they forgot to bring on the right legal team, bring on the right experts, and just put anyone anywhere. And I don't think that's an effective strategy.
So, Brian, following up on that, and it's interesting that you brought up the regulatory environment and talking about the administrations, because I think from my conversations, the industry is spending a lot of time and effort trying to navigate the changing regulatory structure and its priorities. And as you've alluded to, if you picture this as a pendulum, we've seen a swing from one side to the other. In your opinion, do you think the industry will continue to experience whiplash as administrations change, or do you think that this most recent swing back, if you will, that some of this is actually really a move back towards the center where we once were? And then to follow up on that, what, in your opinion, can financial institutions do to kind of prep themselves, because the sand will continue to shift for some time?
I do think the pendulum will ultimately swing back to the middle. I think the question will be, and this is part of my job, working with our members, can we create an environment where there is a balance between consumer protection and innovation? And I think we can. However, I do think there is a lot of politics outside of the payments industry that's taking place that needs to be navigated. I would say the new administration is, at a point, I think people, when they first came in, the Trump 2 administration came in, thought they were going to deregulate everything. That's not actually the case. Most of the rules on the books are still on the book. So I remind people of that constantly. I think the way to approach it is they are taking a more consolidated view through the regulators. So even though we've all read that the CFPB is winding down in a lot of sense, that doesn't mean there isn't going to be compliance or oversight. And as I mentioned before, having good people in place will stabilize you and be able to weather whatever change comes. Because inevitably, whether it's the midterms or the presidential election or the midterms after the next presidential election, there's always a change in politics. What we're looking for is some stability to weather that change. And we're happy to have conversations. There's always going to be issues that come up. But if the rules of the road are stabilized instead of this swinging back and forth that we've seen over the last 8 to 10 years, I think that would only benefit industry. Then industry needs a roadmap to move forward. They want flexibility to innovate. And I was just talking about this morning, right? If you look at the prepaid rule, the ANPRs I mentioned earlier came out in 2012. The final rule was in place, I believe, around 2015, 2016, and didn't really go effective by 2019. The minute that rule came out, it was out of date. Technology had surpassed anything that was contemplated between 2012 and 2016. Phones became more ubiquitous. People started banking on their phones more frequently. Online banking exploded. And then COVID hit. And then we all learned how to bank remotely, conduct business remotely. That is not by accident. The infrastructure for that to happen was laid down years before by the industry writ large. It worked mostly for the most part, safely and efficiently. We are just living in a different world from when that rule was contemplated. Um, so it's not just the political swings back and forth, because the first Trump administration didn't change the prepaid rule either. I remind people of that. But having and encouraging regulators to not only one plan for today, but where are we going? What technologies are going to be here 3 and 4 or 5 years from now? In a lot of cases, the banking industry is being regulated by rules that were written 30 and 40 years ago, where they could not imagine the environment we live in today. So, I go back to, if you have solid people and do the blocking and tackling, that is probably the most consistent thing that you can do to, weather the pendulum, and then make sure that you're prepared to take advantage of the opportunities come in the future.
Sure. And it's interesting, Brian, because you talked about this balance between consumer protection and innovation. And uh, we just saw last week where the OCC granted provisional approval for BitGo and other custodial companies to convert to national trust banks. So, and the knee-jerk reaction to some traditional players in a financial institution was, well, no, not that innovation. That's other innovation over here. So, so the question is, what implications and impacts do you think that this particular action will have on traditional financial institutions and other fintechs, either as it pertains to this use case or just kind of as a wake-up call?
I do think it's a wake up call. My colleague Ben Jackson and I talk about this a lot, in that you got to get in the game. The way we've been banking, even though it's changed a lot, specifically in payments over the last 10 years, that change is going to continue for the next 10 years. And so you take stable coins, for instance. Even if you are not in the stable coins business and decide that's not for you, you still need to know how that works, because it's going to impact how we are banking. It's going to impact how we send money back and forth. They're working on a larger market structure bill in Congress. That's even going to, kind of make further change in the long run in terms of digital assets. Are we going to be using the blockchain 10 years from now? Are we going to be living in a world where the digital asset providers live under different rules? Are they going to have Reg E? I think there's a lot of questions that need to be addressed. But saying, hey, there's more competition here, and not stepping into the arena, I just think is unwise. I think if you look at the tea leaves and you look at, there's open banking, right? You're going to be sending data back and forth all over the place. Whether or not there's a fee involved, that's a different issue, but that needs to be resolved by the CFPB. But data is going to be sent back and forth in ways on a quicker level than we can imagine. AI is going to play a role. Different companies are going to seek different types of charters. PayPal seeking a charter. I believe Fiserv has a special purpose charter in Georgia. Everyone's going to have their game plan. If you think that people are going to sit by and just let the old world kind of continue to go on, I just think that you're dreaming, in that banks have to diversify, find new partners, and figure out how they're going to fit into this new role. And I think there's definitely a role for them. But if you look at all the things that are happening, the rest of the world's kind of chipping away at your traditional bank.
What you were walking through with in relation to open banking, AI, you can even add industry consolidation, because that occurs as industries mature. And we're certainly in that maturation stage, I think, for our industry. When you look at stable coins and how that starts to tag into blockchains, digital assets, I think also when you start to look at the more macro environment of consumerism, when you look at newer generations, they're more accustomed to a wallet experience. They're more divorced from a card, and certainly more divorced from a check. And so I think every generation that goes by, you start to see a little bit more of a bifurcation between what was the old and then what looks to be the new. And I think even as you start to expand in that space, you have all those alternative payment modalities like Cash App and Venmo. You have all that money that's sloshing around that may or may not be FDIC insured. To your point, they may or may not have the same rules, the same structure that we do, same regulations. And so I start to wonder, as the OCC or any other regulatory body starts to look at that, the only tool that they have in their toolbox is really banks and their ability to issue charters. So do you see them getting more creative in that space to maybe introduce more tools? Or do you see this space evolving in such a way that the banks can't run from it? They have a role to play in it.
That's absolutely right. I do think they have a key role. And if you look at the rules, the bank is at the center of all the compliance. And I like to remind people, and I may be overstating it a little bit just for emphasis, which is if you are partnered with a bank, you are now part of that bank. You have to follow all the bank's rules. That is a difficult thing for a lot of third parties to understand. And I've heard that the rules are confusing to we don't have the personnel. Then I think, you may want to reconsider if this is the role for you. And I do think the consumer is going to dictate where things go. Let's take stable coins. I don't think anyone's an expert in stable coins yet, but if you're going to be using your Amazon dollars to buy things at Amazon, and I'm going to use my Chase dollars to buy things through Chase, or people who have partnerships with Chase, and I'm going to use Home Depot dollars for buying things at Home Depot, it reminds me of when in the 80s when people had like 20 different credit cards. And I do think we're going to go through this process of not consolidation, but winners and losers over time, right? Those 20 credit cards, most people don't carry anymore, right? They're down to 2 or 3 at most. And they use them everywhere. Whether it's points or I get a better rate here or something. I think you're going to see that kind of process play out over the next couple of years with stable coins. In terms of digital assets writ large, I do think that you're in a space with there's going to have to be a lot of education that takes place on the consumer level. Are people going to understand how to buy and sell things using crypto? I don't know. I like to joke we don't use the metric system here, so we're probably not good at fractions. But I do think it's going to take time for all this to filter down. And I do think there's a key role for payments in the middle of it.
Yeah, I think that what you're capturing is completely accurate. I think that when you start to look at open banking, the amount of disruption that can take place there, I was just on your folks' podcast, the IPA podcast, Brian, with the illustrious Ben Jackson, and we had a similar conversation just around how these folks, these social media platforms, whether they know it or not, they're sitting on some of the largest value because future state, if you're a Pathword or you're an X, let's say, or excuse me, a Meta, or you're an X, let's say, you just need to capture consumer consent. Now you can start to share financials. You have the opportunity to provide better pricing because you have just volume, you have reach in terms of customer experience. It could be one of the largest, I think, opportunities to transition account holders from their existing or legacy banking relationships. One thing that you said, though, and it's been resonating since you said it, and it was maybe about 5 minutes or so ago, and I feel like as I've molded around, I think that this is axiomatic. I do think it's absolutely accurate. It's true. Is that even with all the change, the constant is always going to be enforcement and oversight. So all that change we talked about from consolidation, stablecoins, open banking, AI, all of that change we know, but that constant is that enforcement and oversight. So there's more pressure now on fintechs, those partnerships, the value propositions that you're putting together that are coming from all these directions, regulators, consumers, and market conditions. Where do you see the greatest misalignment right now?
I don't know if there's a misalignment. I go back to, is the consumer at the heart of what you're doing? It's going to be young people that drive the conversation here, right? We all know they're willing to try new products. They're not married to institutions. Um, are you serving your consumer? And again, I go back to we're all capitalists, but there is a way to make money and still serve your consumers and do consumer protection. I think our goal as an industry is to remind the new entrants that there's a way to do this and that there's a proven way, there's a steady way, there's growth. But if you're not doing right by your consumer, none of this is going to work.
So, in relation to that, when you say when we're not going to do right by the consumer, I would agree with you. And my mind goes back to just one example, and that's the Facebook, Instagram example, where Facebook, by all measures of imagination, had a more robust platform in terms of interaction, posting, commenting, DMing. But Instagram was gaining market share simply because it took less clicks to post a picture. And at the end of the day, that's what consumers were after. And so you're right. The amount of innovation that we're undertaking, it still needs to be centered on that consumer. And are you making their life easier? Are you providing maybe a de novo form of value? And as these things start to change, and as the industry has continued to evolve, what role do you see trade associations like the IPA playing in helping the industry grow without perhaps slowing it down?
Well, I think there needs to be, I think it's helpful to speak with a unified voice, that the industry, and we represent different parts of the industry, which I think is a good thing. There needs to be some clarifying voice in that consistent messaging in terms of the benefits. And I always go back to, I took a marketing class when I went to grad school. And we focused on Coke, and Coke is the number one drink in the world, probably still, but at the time it was. Then they still spend $1 billion a year to remind people to drink Coke. And because they've shown, they have studies that say if they don't remind people, they start wandering off, and you have to get out in front and remind them you like Coke. And not that we're pushing soft drinks, but I do think similarly, you have
We
to
do like
remind
Coke.
people that there is a benefit to the banking system working efficiently, innovatively, and serving consumers. I do think that at the same time, the landscape changes. The rules might need to change. Members of Congress change. People retire. You have to constantly kind of remind people, here's what we're doing. So when they ask questions, we're a resource. And I do think there is benefit in making sure that we have a robust banking system to support the rest of the economy. As I mentioned during COVID, the one reason we were all able to do this seamlessly at our homes is because of the investments made by the banking industry over time and the rules that were in place. We have never said there should be no rules. Our goal was to always right fit the rules, identify the issues that are problematic, and narrowly tailor a solution to that, keeping in mind that things will change down the line. And I don't think, again, that was by accident. I think the industry has done a great job. We're not perfect, but it's done a great job of laying the groundwork for some of the change that's happening now.
So, Brian, shifting gears, thank you for that. For shifting gears, the sounds like the days of the 18-hour workday are more in your past than in your front windshield. Can you tell me a little bit about what you do outside of work that energizes you for the time that you spend in the office?
Well, that's a great question because I'm transitioning to soon to be empty nester. For the last 20 years, I've done my private life has consisted of running kids to sporting events and different things. And so my youngest, who is a wrestler, is a senior now, and that will soon be over in a few months. But mostly that, and I'm trying to figure out who I am outside of my kids again. My wife and I, and we do. My wife is great. She volunteers and coaches a girls basketball team at the Boys and Girls Club, even though our kids aren't playing. We're kind of active in the community and do some volunteer work, but at the same time, again, I'm going through this process like, who was I before I had kids? And trying to remember, what we did for fun. But mostly, honestly, if you ask my kids or my wife, just staying downtime and being quiet and not doing too much. I know I speak a lot and I'm on, in front of our members a lot or engaging the public. But privately, I'm totally the opposite, which is hard to believe probably, but not quite a hermit. But, I do like my downtime to kind of just figure out and recharge. I do read a lot. We tried to do a book club here that we did for about 2 years and it kind of slowed down a little bit. Hopefully we can pick that back up. But that's a good question. I'm still in the process of trying to feel like I'm self therapy here. What I'm trying to figure out is, what the next chapter may be. And, there's not a lot of time left in the day after work and kids, but it's something I'm going to try to figure out.
The last question that I have is what gives you the most optimism about where the payments space is heading?
That's a great question. And I will say this, and I touched on it earlier, which is I still think this is the most exciting part of banking. And that, we have stable coins coming in, digital assets coming in, open banking. I think all of these new things are going to lead to, new products, new ways to reach people. One of the great things about this job that, is rarely discussed is that we are doing all of these things for people who will never know that we were the ones doing all of these things, in terms of we're going to try to make your life more, take control of your life on a financial basis, and empower you in a way that you kind of think about, and which is, you don't want them to think about it, right? You want it to just work. Whether it's EWA, buy now, pay later, making your mobile wallet more flexible. I always joke when people talk about faster payments. Go ask your best friend if they know what faster payments are. They don't know. It's not something that comes up. All they know is that payment A reached merchant B, or you were able to send money to your friend and it works seamlessly. The stuff behind the curtain is for us to worry about. And so that's the biggest thing that gives me optimism, is that we are doing things, whether or not people acknowledge them or understand them, in a way that helps people improve their lives. I always tell people, I don't know how to fly a plane, and I don't need to. I just know that the plane works, and that's all people are looking for. So I know the banking industry gets beat up, and payments too, underneath that as a sub kind of area. But I do think, at the end of the day, there are a lot more good people than bad people, who are outliers, in my opinion, who are all trying to work hard and do the right thing. So I'm very excited about what may come tomorrow, what new ideas come out. The great thing about this position that I'm in, I get to talk to a lot of people who are very smart, and some of the ideas work, some of them are impractical, or, a lot of times they're ahead of their time. Ben and I talk about that a lot. We talk about Bluebird over at Amex, right? They came out a lot earlier than a lot of other companies did. It, might have been too early for people to digest what they were doing with Bluebird or Serve. You do have to hit things at the right time, but you get to talk to a lot of smart people who are thinking about things in a way differently from yourself, that could ultimately come true and change how we all bank, or change how the flow of funds work. So I do think this is an exciting time, because I don't think we've captured the potential of crypto just yet, or the blockchain, stable coins, the rest of it. So, I still continue to think this is the best part of banking to work in, and I'm excited about what may come next.
Thank you, Brian. And that engaging dialogue was powered by Sunrise Banks, member FDIC, equal housing lender.
Thanks for listening to the Social Currency Podcast by Sunrise Banks.
If you've enjoyed this episode and you'd like to help support the podcast, click like and subscribe anywhere you get your podcast content.
We'll see you soon.